Okay, yesterday we had I think it was a really interesting day. We get about one day a month like this where you have this kind of a grinding type of trend where it rarely goes up very fast. It looks like it's struggling all the way up. You can tell by that initial spike, overlapping bars, small bars, tails, everything was a struggle, but it went relentlessly higher. And on a couple of the pullbacks, it didn't hit the breakout point. So the buyers were very aggressive. Anyway, it was a spike and 3 pushes up, so you know what I would be looking for coming into the day. I would be looking for 2 legs down. The market had what could be the first leg down into the close yesterday. Possible 1-bar final flag into the close, and then a reversal up. I probably should have bought that. I should have treated this last bar of yesterday the same as the first bar of today, especially after it was a 1-bar final flag, breakout pullback from a micro channel. I know that the next to the last bar of yesterday didn't break out above the channel, but a lot of times when you get a final flag, 1-bar final flag in a micro channel, it acts as if there was a breakout, and the final flag breakout is the breakout pullback. Anyway, I should have bought above that. I thought the odds were good that we were going to get 2 legs down, and not just 2 little legs, not legs that had 1 or 2 bars in them. There has to be some proportionality with the pattern that it's correcting, and it's correcting a pattern that went on for 4 hours. So I expect the legs to be decent size. The first leg down is decent size, and I think the second leg down will probably be around that big as well. So anyway, I'm looking to short a lower high for a second leg down. Doji bar is not a great signal bar, but potential second leg sideways to down, so I think it's an okay short. Now we've got a 2-bar reversal, bars 1 and 3. The market enters the trading range, sometimes just 1-bar pause. I probably should have bought this. It's a 1-tick failed breakout of the 1-3 double bottom, and we had the spike up on bar 1, and there's room up, but I didn't. I was still looking for the lower high second leg down. Okay. 6 is an inside bar in the middle of a trading range from the past few hours. I don't like to buy high 1 longs except in strong spikes, and this is not yet a strong spike, so I didn't buy it, and I missed a decent long. Actually, was it? Yeah, it hit a target. Anyway, the market double topped with the wedge yesterday, and that's pretty common in wedges. They often double top and then trade and sell off. So I think the easiest short of the day, or the easiest trade of the day, was shorting below 8. We got an inside bar at 9. It was a bear bar, which is better than a bull bar. But anyway, I thought that was probably the single easiest trade of the day. A 2-legged test of yesterday's wedge top. The market should have at least a second leg sideways to down. The range of the day is about 4 points, so there's room for a measured move down. Good entry, good follow through, 2-bar reversal. The glitch here is we're now at the bottom of the trading range for the past few hours. Not a good looking bull reversal bar, too big a tail on the top. Low 1 short here, but this is bar 13, but we're at the bottom of a trading range. And yes, trading ranges do eventually successfully break out, but most of the attempts to break out fail. And that means the odds favor this not breaking out, and therefore I cannot short here. If this was a great bear, you've seen great bears, you've seen great bulls. Great bears would not be going sideways here. They would have fallen to 53, 52, 51 non-stop. So you have to ask, why is this stalling up here at the bottom of the trading range? It's because the bear is not a strong bear, and if it's not a strong bear, I don't want to be shorting at the bottom of it. So that to me is a problem for the bear's case. 2-bar reversal with 14-15. Yes, we're at the bottom of a trading range, but that bar is too high up in the range, so there's no way I'm going to buy up there. I could have shorted below 16. It's a low 2 short. There's enough room to the bottom of the range. But my concern was the market reversed up on 12, it reversed up on 15. Pretty good buying. I think the market's probably going to be finding buyers again down here at the bottom of the trading range. So I didn't short, although it turned out I think that was, the scalpers made a profit. Okay, you got a double bottom with 18 barbed wire. forcing you to buy a little bit high up in the range. I personally did not buy up there, and I certainly wouldn't sell below because I'm not shorting at the bottom of a trading range. Yeah, they eventually will break out, but you're 1 out of 10 times you'll be right. 9 out of 10 times you'll be wrong. And I'm not going to take a bet where I'm going to lose 90% of the time. Outside up bar on 20, pretty good momentum. Inside bar on 21. Again, another possible low 2 short with a bear bar. But we're starting to accumulate bull spikes at the bottom of this range. 11, 12, whatever this is, 15, 18, 20. The market's consistently finding buyers down here, so I'm not going to short. I probably should have bought below the low of this bar, but I didn't. At least I don't think I did. I did do some buying below bars in here, but I don't remember which ones. Okay, I think 23 is an interesting bar. It's a 2-bar reversal at the bottom of the range. You could also argue it's a wedge down because it had at least 3 pushes down. 14, and then 17 and 20, 22. If you want, you can also count 4 or even 1 on yesterday's close. So anyway, there were many pushes down. We're getting a little bit of a wedge shape. I think that is a decent looking long setup. Good bull spike, good, especially bar 25. Small tail, good sized body, no tail on the top. Breakout of a wedge bull flag. Have we had 2 legs down? I was looking for 2 legs from the wedge. Yes, I think the leg down on yesterday's close and then this leg down to 23. That's a good enough 2-legged correction, so the market may try to break out above yesterday's high. So I think it's reasonable to buy pullback. The market might try to test the breakout around the 56 area. It should not get below that strong bull trend bar, 25. So if it's not going to go below 25, it probably won't hit the 25 low. It may come to within a tick of it, which is 56 1/4. So I think it's worth placing a limit order to buy 56 1/2, which is what I did. The market tested up a few times to my profit-taking limit order at 57 1/2, and it didn't fill me. So I ended up getting out. Since the market's forming a little double top here at 29 and 32, theoretically it's a possible double top bear flag, and this could be a failed breakout of this large wedge bull flag, but I didn't short. The market had a good spike down on 34, 35, and then when it got to the bar 24 long entry bar low, it dropped quickly. I think it dropped like 2 or 3 ticks straight down. So that tells me that lots of traders were looking at the bull entry bar 24 as the last line of defense, and I probably should have shorted. And once I saw the little plunge below it, I should have shorted. I didn't. I waited for a pullback. 37, a reversal up from the bottom of a trading range, but the way 36 fell below that 24 entry bar, I thought more down was likely. So I think there will be more sellers on top of the 37 reversal bar than there will be buyers. I think it's good to be shorting pullbacks. You can either short with a limit order at the high of the bar, a tick or 2 above the bar. You can think maybe it'll be a 2-point pullback, so you can short 6 or 7 ticks up. You can look for a moving average test. It doesn't matter what approach you use, but I think it's a reasonable short. There's a low 1 short at 40. Didn't quite reach the moving average. In my mind, I probably wouldn't short that on the basis of the low 1. I did short it on the basis of any one of the things that I just mentioned. Good looking entry bar on 41, 43 good, 44 good, really good bear spike, but it's basically 2 pushes down on a trading range day. The first push down 37, second push down 44. That's 5 bear trend bars in a row, and on a trading range day, that is a lot. Normally you get 2 bars in a row, sometimes 3 or 4. 5 is really pushing it.